We've got former Fed advisor Danielle DiMartino both. We've got market watcher Dan Geltrude, and last but not least, my buddy Charlie Gasparino. So, Danielle, looking at this, what changed in 6 weeks, you think?
Well, apparently in 6 weeks, we've gone from being worlds apart from neutral to, quote unquote, two words, just under. And that is when markets really, really took off because they priced in exactly one more rate hike come December the 19th, and that's it. They are considering 2019 to now be in complete pause mode, and stocks took off. He also mentioned that stocks themselves were not overvalued. He spoke about the obscure as far as most investors are concerned, and that's the fact that there's this incredible overvaluation in the fixed income market. But markets looked right past that and just focused on the Fed is going to pause. Powell is kowtowing to the president. That's what the optics said.
All right, optics might be one thing. The reality for those who try to skew politics, and they're saying, well, all we know is all the major market averages now are in positive territory for the year, and December is typically a good month, right?
Yeah, I think, you know what I think happened here, Neil? I think the president got to him. I'm going to use a little bit of a baseball analogy here. It's like when the manager goes out there and he's screaming at the umpire doesn't change his view at the moment, but he's in his head. And then the next time he makes a call, he's remembering that argument. I think that's what the president has done to Jay Powell. I think he's gotten in his head and he's made a difference, because why else would he do what he did?
Well,
what's changed?
Something did change.
I agree
right?
with that 100%. I mean, this is a very, very bad precedent that Jay Powell set. I mean, he basically came out there and did a 180 in 6 weeks. I mean, not that much has changed over the last 6 weeks. Same sort of trade war stuff. I mean, same sort of basically the same sort of economic indicators. And then he does a 180. And I'll tell you, here's what I'm worried about. It's something that you hit on, is over leverage of corporate America. I mean, the reason why the Fed needs to unwind its balance sheet and maybe raise short-term rates. I think unwinding the balance sheet is even a bigger issue. Raise rates is because A, the economy is improving, and number two, you could have asset bubbles. We should not be incentivizing corporations and individuals, and mainly corporations, because they went on a debt binge to borrow more.
Well, so you don't buy that. He's not worried about that sort of thing, are you?
Oh, I think
he's not.
I think the shot across the bow. I think what has changed in the last 6 weeks is what happened at General Electric. What happened in the trading of those bonds when, in the blink of an eye, nobody cared that the stock was trading south of $10. Nobody cared that they slashed their dividend to a penny. But when their bonds went to 80 cents on the dollar and started trading like a junk bond from Mike Milken's day, that freaked out.
Well, what you're saying, and Dan, what she's saying is that the Federal Reserve was guided by these markets and responding to these markets, and I didn't think Federal Reserves did that.
Well, I think it's a combination of things, and I think part of the danger of where we are is if Jay Powell is going to hold off on raising rates, if that's where we're going to go, where do we have room when a recession hits? Because one's coming.
That's a great
one's
point.
coming.
All right, so now we just to get not too wonky about this, but we're going to probably have a Fed funds and overnight bank lending rate, something the Fed directly controls, by next month around 2.5%. And Jerome Powell is saying that's kind of low by historical standards, which it is, about half the norm. Right. But it's a long way from zero, and they've got a lot of arrows in their quiver because they have raised it. Are there enough arrows?
No.
They can't really do QE, right? QE is when you buy.
Could you
go out.
Please try to avoid technicals?
I'm sorry.
For God's sake. You're doing it again.
Yes.
They can't blow up the balance sheet.
Right, exactly.
That's when they lower long-term rates. And they really can't. I mean, 2.5.
So why, if you're right on that, and others people have expressed that.
Idiots.
Okay, that's lovely.
They are.
But could I ask you this?
Off of headlines.
Why were stocks up so much? Because someone would get pause here and just say, wait a minute, they're going to slow down on interest rate hikes because things are slowing down.
Neil,
should I be worried?
Look at new home sales at a 3-year low, and
down
the market's like, woohoo, let's go, the real economy is slowing. Really?
So is this, I guess what I'm asking you guys, was this an overreaction?
Listen, stock traders trade off the headlines, and their stock market and their long-term, maybe the stock market reflects value long-term, but short-term
people betting against the market,
it's very imperfect. But remember
themselves.
what happened with the market in November 2007, right before the bottom started falling out. Stocks were at historic highs. I think it was at 14,000 on the Dow. And then you know what happened next. I'm just saying that, stocks are a very imperfect measure, and I'm worried about too much leverage in the financial system. And at some point, You're going to have to pay for that. And if there's any sort of
let's talk about that. There's a good time.
Right.
And maybe, Dan, you can. One of the things that Powell was saying today is that now we're going to be data dependent. In other words, we're going to make moves based on the data and whether it necessitates having to move. But he doesn't see banks in nearly the duress they were a decade ago, right? So he's saying that, yeah, there might be some overvaluations here and there. I'm just paraphrasing, but I don't see the kind of asset bubbles that we once had. Do you agree with that?
Actually, I don't. I think there's more trouble around the corner that we're not paying attention to.
And the reason do this because foreseeing that trouble.
Well, I don't think that he is. I think that's part of it, but I still think that the president is in his ear, Neil. That's really what I believe. And you know what bothers me about all this? Your Fed chairman's got to have a steady hand. I don't expect that he's the one who's going to be chasing the shiny object here. And that's what I'm a little concerned about, that a month and a half ago, we're one place, and now we're in another place.
I just think it's too obvious. I love you to death, but to so that you're calling the president's tune or that he is whipsawing you, when you could make a case, Charles' argument notwithstanding, that all right, there are signs that markets are hiccuping, GM, layoffs, the housing industry. You could make a credible argument, apart from being politically pressured, to slow down, right?
You can. I mean, if you look across energy states, if you look across manufacturing states, real estate and construction states, and leisure and hospitality, we studied this a few days ago. Jobless claims across all of these sectors have turned up. They've come off their bottoms.
But is it still a solid economy to you?
It's a weakening economy to me, and I think that Jay Powell
weakening from these highs. In other words,
sure, of course.
Is this market and what it's doing now justified at around these levels?
After 9.5 years of expansion, I would say no. I would say these stock market investors are smoking crack.
What do you think?
Well, we did pump a gazillion.
Absolutely.
Dollars of
$22 trillion of global quantitative easing on top of it.
Every time there's a bubble that bursts, it usually and I know he said that I don't see something like the banking system, but that's a false premise. Again, I use that word.
The leverage wasn't in the banking system.
Because the leverage is now not in the banks, it's now in corporations.
Exactly.
And that's the problem I think he has. And now, when does that pop? And do you need to pop it? And I kind of think you do. You need to let the air out of it, because if you don't...
So you disagree with the pressure that the president was putting on the Federal Reserve?
No, I agree that he buckled and he shouldn't have.
No. That's what I'm saying, though.
Right.
That you don't think that was the right approach for the president to take.
Well, I don't care that the president did it so much, because I expect presidents to do it. I don't fault Trump, because presidents and administrations have always complained about Fed Chair. I fault him for caving. He's a wimp.
But you're saying caving when you could make a good argument, she just said, to do what he did.
But look, to Charlie's point, an hour before he hits the podium today, a financial stability report hits the newswires that basically calls into question everything the Fed has been saying about financial stability. An hour before he hits the podium, it was too well orchestrated. And and he has to have signed off on that report being released that stated that all of this financial instability was brewing. But a few weeks ago, he said did not even exist.
The GM troubles triggered this and changed the writing of this speech today. Do you think so?
Yeah, I think that's cover. I agree with Charlie. I think he's using that as cover, and I still go back to I think it's an Italian thing.
It's more than a third of their North American workforce. More than a third. This is more than SUVs overtaking cars. This is a third. It's a big number.
Neil, this corporate leverage is pretty alarming if you think about it. Listen, I'm doing a lot of research on Amazon, maybe buying the Fox regional sports networks. How are they going to buy those? Not with cash.
Oh, I thought you were shopping on Amazon.
I do that too. I love
Mr.
that.
Prime.
But how are they going to do that? They don't. They're a great company. They have a lot of revenue.
Do you think the leverage is anything like it was a decade ago?
In certain companies, it is.
Oh, it's substantially higher than it's ever been.
All I'm getting to, guys, I have to break away here, but all I'm getting to, this response today is a short-lived event? Is that what you're saying, or no?
I think that there were a lot of people covering their bets today in the markets.
Yeah?
I agree. People are...
Well, you and Gasper got to quit hanging out together.
You've
got
too many Italians
it's like gum
here.
on my shirt.
That's a false premise.
All right, well, we did.